Good evening, everyone. It is Friday, the 15th of November, 2013, and this is Brian Shannon speaking from Alphatrends.net. Let's take a look at the closing numbers for this week. We had another very bullish week for equities. The S&P 500 up 1.5%, NASDAQ about 1.7%, and really broad-based strength. So let's take a look at the action here. The S&P 500, as we've been saying, is innocent till proven guilty. We had a slight pullback that undercut a little bit of support a week and a half ago, but it bounced. Found support, that is, at the rising 20-day moving average last week, and from there we've seen a higher low at 176, and then upon breaking out beyond the 177.5 level, we've had a straight up runaway market here as seemingly the shorts are chasing this market and really adding to their or trying to mitigate their losses here. When the path of least resistance is higher, you're generally going to see that consolidations are resolved in the direction of the primary trend, which is why we call it innocent till proven guilty. And as long as this market continues to be rising above its rising 5-day moving average next week, then it's going to remain innocent till proven guilty. Our key level of support for next week is down at 177.5, which is obviously pretty far away. It's now 2.5 points away from there. So be careful that the market is maybe a little bit extended and could pull back. But to try to pick a top and to sell this thing short, to me, is a foolish choice to make, as no one has done it right this year or in the last 5 years, or pretty much no one has ever picked the top in this market as we're closing at all-time highs here. So the NASDAQ was up nicely as well, added to those gains a little bit today. Last week we broke support briefly in here and came down. We came back up above it, that is, and from that failed move lower came this faster move higher. We finally got above that 5-day moving average and the resistance we were talking about at 82.50, and then we continued to blast right through the highs for the year of 83.35-ish in that area. So next week we're going to want to see that this 83 to 83.30 will act as support. We want to see a rising 5-day moving average continue to hold as support, and this market again is also innocent till proven guilty. There's no reason to look for a top. There's no evidence of selling. We had very good breadth today, 1,900 advancers to 1,000 decliners. The Russell 2000 hasn't broken out to a new all-time high yet, but if we take a look at the numbers year to date, the Russell 2000 is still leading, up 31.4%. So you can't say it's underperforming, in my opinion. We saw it pull back in a healthy way to the rising 50-day moving average and this prior level of resistance. That was also, if you recall, about a 50% retracement of this prior rally that we had seen, that we were measuring off of here. We came down to the 50% retracement. Anyways, we can see that this pattern of lower highs and lower lows was broken, and as that occurred, we saw the 5-day moving average flatten out. We took out a little resistance at 109.50, and the key area that we were really focused on was 110 to 110.50. This band of prior support was acting as resistance, but we got back above it today, and for next week, we'd like to see 109.50 to 110 hold as support. I would expect that this market does continue to break out and see new highs. The semiconductors were up 28 cents, and they're holding on very strong above a rising 50-day moving average. From an intermediate term standpoint, the semiconductors, I think, are probably a little bit more neutral and choppy in here. You can see that this week we had a lot of really choppy action in the semiconductors. Let's look at a 10-minute time frame. So a lot of bad openings and just really choppy action. So for me, the semiconductors are a good group to stay away from for now, but if you look at it on a longer term chart, I think that again, the path of least resistance remains higher. We're seeing higher lows on the daily chart as well, so next week 40 will be an important level, and probably for the next few weeks going forward. The financials did break out to new highs on Thursday, and they continue to add to those again today. We saw again a higher low above a rising 50-day moving average, and from there we now see that the financials are up at multi multi-year highs, and that from this point, it's looking like the possibility is up near $23 a share. But we'll just continue to not focus so much on price objectives, but on risk management. That's really the key. We saw a pullback below the 5-day moving average. The 5-day moving average was advancing, and we created the higher low here, and then finally broke this 2090 level on Thursday. So we want to see $20.90 act as support early next week. If that continues to hold, then we're still innocent till proven guilty in this market. Gold was down slightly this week, and you can see here, this is the triangle we've been talking about. We are below declining 10, 20, and 50-day moving average, so it remains guilty till proven innocent, still looking like it's headed towards that 113 level to me. Shares of Apple were down $3 today, but they did have a positive week this week, and we remain in a position, I think, to go challenge these highs up near 550 or so from late last year. This, to me, 550 to even 575, I think, is a likely level that this market might even be, that Apple might even be able to obtain this year. But we don't want to just blindly buy. When we look at the 30-minute time frame, it's been a little choppy in here. We broke some resistance on Thursday, but as I tell people, you don't want to buy as the market is getting extended. Instead, we want to see it pull back. That's exactly what we saw today. I think that next week, if we can get back above the highs from Thursday here at about 529.5, then this market is poised to really continue to move higher. So keep a close eye on Apple next week. This week was a great week for a lot of people in trading. It's easy to make money when the market looks like this. The key is not to be complacent. As soon as you let your guard down, that's when things go wrong. At Alphatrends, we had Lululemon as a short on what was it, Tuesday, I think, and we covered it that day because the primary trend of the market was higher, but very volatile in there. We did time Twitter very nicely on Thursday, just above this 42.80 level, and had a very nice trade in that. We also got involved in SEIC right at about $33.45. So you can see there's a pattern here. That is that we're buying these stocks like Paychex as well as they come up above a rising 5-day moving average and make that higher high after being preceded by a higher low. And that is a consistent approach. If you do anything in this market, don't chase things, don't chase news stories. Have a consistent approach. That's how we got involved in shares of P on Wednesday. I did that short selling webinar on Tuesday and mentioned this is a good candidate for a short squeeze by getting above 28.25. I also mentioned shares of Away getting being a good short squeeze candidate at about 34. So there's a lot of good opportunities still left in this market, and you don't have to take a lot of risk. You don't want to be chasing stocks after they've moved. You want to anticipate. You don't want to try to pick bottoms like people are trying to do in Tesla. Have a consistent approach based on a methodology, which for me is wrapped around market structure, and I'm happy to share that with you on Alphatrends. So thanks for tuning in, and enjoy your weekend.